you want to add something, please go ahead.
Uh, Padma, just one second. Uh, we have received 3-4 questions for the investors. I would request all the participants to kindly send the message on the chat box so that once Padma completes her session, then probably we can take questions one by the investors. Thank you.
Yeah, so I think very well covered by Sandeep. I just want to add a few important things that
Padma, you are on mute.
I'm unmuted. Nitesh, can you hear me?
Yeah, we can hear you. Please continue.
Right. So yeah, thank you. Sandeep has already covered, all the key important points that why do we see or why our outlook on markets is constructive from here on. Now, specifically, I just want to reiterate a few important things. One, obviously, like we saw the FII selling chart, that how FII selling has been relentless, and that has also been one of the factors which has caused pain in Indian equity markets. Now, historically, if you just go by historical data, typically this FI selling doesn't really continue beyond 2 or 3 consecutive quarters at this scale. I mean, so from that perspective, given the landscape in which we are standing, where India remains as the fastest growing economy for CY 2025, and given the increasing risks of stagflation in the US, because whatever is happening, which Sandeep already discussed in detail, I will not want to go further on that. So given this landscape, I think this is going to quickly reverse. And once FII start chasing India again, I feel markets will recover, and we've already seen it in the last 3-4 days. It's also important to note that while people keep complaining that valuations are very expensive and there some kind of fraud was building up, and now you see that if post the recent correction, there are so many value pockets that are emerging, where there are companies which are likely to give 25-30% CAGR growth over the next 3-4 years. Now I'm specifically talking about the smaller companies, because we want to focus on that. We want to focus on the next large cap. So we try to identify these kind of multi-baggers. So that's the reason why they can actually trade at expensive valuations, because they have that earnings visibility. And these are all in like niche segments where global dynamics doesn't really have much influence. So that way we should not be overly worried with what the headline valuation look. We should be completely into bottom up research, which is what we as Sowilo do. And that is where we can actually make money in the next 6 to 9 months. So yeah, that's it from my side. I think we can, Nitesh, we can start in taking questions.
Thanks,
Nitesh, before we start taking questions, I just want 2 more minutes. I will like to discuss 4 stocks which we have sold recently, and we have to sell them because of compulsion from by due to change of policy of the management. And we have sold them despite when we bought them with lot of research, and we were very confident of them. And the names are Hariom Pipe, and then there is Sterling Wilson, and then there is RIR. I will explain you why we sold them. We have done a lot of research when we bought them, and they were available at 60-70% discount to their peers, and they have very strong growth, a very high capex they have done. But and we met the management regularly. We have met them in every conference, and we were meeting them regularly. We were in touch. To start with Hariom Pipe, in case of Hariom Pipe, suddenly last week we saw that they are suddenly announcing our diversification into solar space, and the confusion is so much that initially when we spoke to them, as soon as we saw that press release, when we reached out to management, they said that it is for our captive, so it will reduce cost and it is good for the earnings of the company. So we said, okay, fine, that everyone is doing, and it will save electricity because it will come at 2 point something. After 2 or 3 hours, when we again reached out to them, then they said that no, actually we have some barren land which we where we will generate some extra electricity, so we will sell that, and because of that we have to pass a board resolution, so we are keeping a board meeting. And then finally in the evening they said, no, we want to diversify into this space, and we are getting order from Maharashtra government. So now these 3 things same management has said in same day. Now you can say that there is a judgment error on our part in judging the management. I agree, but we have been interacting with them for last 2 years, and they have never behaved this way, and suddenly this has happened. So we did not have any choice. We have to protect the money, whatever is left in those scripts, and we have to sell them. And remember that we all are co-invested in the, and we took a lot of pain to book that loss for ourselves also and for the investor, because See, I don't want a situation where because of unnecessary diversity and a leverage balance sheet, the stock becomes zero. So we have to cut that loss. Similarly, in case of Sterling Wilson, the reason why we invested, and when we invested also, the stock was damn cheap. It was like 60-70% cheaper than other companies. Reliance has taken over. It was already with Saporji Group. So everything was fantastic. We have gone through its order book page by page in detail. I have reviewed personally 90% of the order book. All good orders, all good company. Unfortunately, what we are hearing is that there is a tussle, legal tussle now starting between both the old promoters, that is current promoter Reliance and Saporji Palonji. Now we don't know what is the fact to that there is no public, no data in public domain. Now when both the groups are fighting, how can we have that stock, and we have to sell it? There is no option, because if we don't sell it, then today the loss, which is 40-50%, can go to 100%. So this is the another stock where we have to book loss. And the third stock was RIR Electronic. Now that is a semiconductor thing. Problem with that company is that, where there was a conference in Gandhinagar 7 days back on semiconductor, where we met a lot of experts, and the thought process which the experts shared, that this is a very, very enterprising space, and the companies which invest in them can become the next 50-100 bagger, same like we saw in solar. The only challenge is that, the ecosystem is very, very nascent. So we have cut some weight on there. And obviously, when the mid cap or small cap index is down 26%, everything will be down 26, 30, 40%. And we have to, in that stock particularly, we have just reduced the weight, but we are not exiting the position. So out of all these stocks in last 3 years, I can tell you, and there is data, and we can share that data. These are the only two stocks, and the third one is where we have reduced the weight, where we have to cut our position in loss because of change in the circumstances, because of change in the business model, because of change in object of business. It is not because our conviction got reduced because of market volatility or something. We in fact make very, very detailed model of every company which we have in our portfolio, and we are willing to share with any client who wants to in-house also do that work for us. So we are very cognizant of our fiduciary responsibility. And in last 3 years of track record, we did not sell anything because there was an error on research side. It is an error on the side that, companies diversifying for no reason. So that's all. That was the only thought which I wanted to keep with you. And now we can